All right, welcome everyone to the live stream here. My name is Kyle. Here with me is Dan Frito, not to be confused with Dan Frio. No, okay, it's
One,
Frio. Fine,
um,
fine.
it's my DBA.
Okay, so what we're going to talk about is what's going on with rates. There was a recent Fed meeting today, or I should say Fed announcement today. And there's been a nice little change here with rates, getting a little bit better. So Dan's going to cover, you just want to jump into it because we already have a few people here ready and waiting, and I can pull up the MBS charts here.
Absolutely. So as you guys come in, if you would, pretty please, just let us know where you're coming from. And then if you like something we said or you want to agree with us, give us a thumbs up. If you don't agree with us or think we said something that's kind of, give us a thumbs down. We can address those as we come. But what happened today is the Federal Reserve came out, and if you watch my channel on a daily basis, there was no chance of them cutting rates, even with the really good numbers that we saw so far today. So what came in today was the consumer inflation numbers. Okay, they're called the CPI, and there were several different numbers. There's month over month, which means what happened from last month to this month, and then there's year over year, what happened from last year of, let's say, May of 2023 to May of 2024. So that's where we were. It was analyzed today. All those numbers, every one of those numbers was down at least a tenth. Now, that might not seem like much, but it is. So the initial market reaction that we had in the markets right now was what you're seeing on the screen. So if you guys don't understand this or you don't follow my channel, what's happening is this is what we follow to figure out what the heck's going on with mortgage rates. We follow the MBS market. So what the MBS market is, it's a mortgage-backed security or a mortgage bond that trades on Wall Street. And basically the yield on this bond, it correlates over to your mortgage rate. So what creates your mortgage rate is the yield on this bond plus what we call LLPAs, and then bank profit margins. That equates out to the interest rate. So just the only thing you really need to understand about this chart is the price of the bond, which you're seeing on the screen. That's the price of the bond. As the price goes up, yields come down. And then if the price goes down, the yields go up. Let me make it simple. And I do this on my channel a lot. I want you guys to understand how it works, the kind of the inverse relationship here. So I'm going to give you an analogy, and I'll try to get through it as quick as I can. So let's say, for example, you want to purchase a mortgage-backed security, a mortgage bond. So I'll show you how the price and the yield gets affected. Okay, so let's say, for example, a bond always has a maturity value. So let's say the maturity value is $100. Okay, so today I'm going to give you a high price. Okay, so today I'm going to give you $100 for the bond. So I'll give you the $100. You give me my $100 bond. Okay, so next year when the bond matures, I give you your bond back, and you give me my $100. So I paid you $100 and I got $100 back. The yield on that is what? It's zero. Okay, so let's drive down the price to show you how when the price goes down, the yield goes up. Let's say I pay you $50 today for that $100 maturity bond. So I give you $50 today, you give me the bond. Next year when the bond matures, I give you the bond back and you give me $100. What is my yield now at that lower price? Well, it was 100%. So do you see, when I paid you a higher value, when I paid you $100, it was basically zero. When I paid you half of that price, I paid you $50 for the bond, my yield was 100%. So that shows you how when the bond price goes down, how the yields move. So that's what we're seeing right now. The market increased huge this morning. We're out of the gate. Now there's some profit taking and some other things getting affected right now, but that's what's happening. The inflation numbers came in, and they're helping things on this case. Now, the other huge thing, and Kyle and I just found this right before we went live, is what the Federal Reserve did this time is they came out with a new dot plot. So a lot of people came in last year and this year when I said, well, the Federal Reserve is going to reduce rates at the beginning of the year, it was 6 times. And then it changed to 4 times. Then it changed to 3 times. And everybody keeps coming back to me saying, Dan, you don't have a clue what you're talking about. Well, it wasn't me talking. I was giving you the data from the dot plot. So the dot plot is what Kyle has on the screen right now. What this represents is the members of the Fed, they sit down 4 times a year and they put a dot on where they expect the federal funds rate. Okay, so this is giving you a correlation between where the dots were in the meeting that they came out with in March. So the dot plot in March versus the dot plot that they came in with just now. So they're even signaling one maybe 2 rate cuts this year. But then Federal Chairman Powell came in and said, well, next year at the end of 2025, we'll probably have additional 8 rate cuts. So at the end of 2025, we'll be at the 6 rate cuts that everybody is expecting. Now, folks, this is coming from the Fed. It's not coming from me. It's not coming from people guessing. This is directly from the Federal Reserve. So basically, that's the market news right now. So when the news came out this morning, mortgage rates plummeted, and you can see if you go back to the rates mortgage news daily rate sheet, you're going to see rates went down at least 0.1%. They might pick up just a little bit, but I'm expecting them to close the day at least 6.9. Basically right where we are right now. So we're way off the highs that we saw back in October when rates hit 8%. So we're now, at least 1 full percent lower than that at this time. So that's basically what's going on in the markets.
Do you also want to explain, let me see if I can get back to it here, with the differences between the dot plots here? So like what the red is, the blue is, and why these changed?
Yeah. So what happens is, like I said, that what's representative on the side is the federal funds rate. Okay. That's the rate that the Federal Reserve controls. Okay. What that rate is really interbank lending. Okay. It's not like car loans or anything like that, but it's the cost of banks lending to banks. So when their costs go up, they're like, well, heck, we're going to pass on those higher costs to you guys, the consumer, on short-term maturities like bank loans, personal loans, credit cards, car loans, and things like that. So what you're seeing on the screen is the red numbers were representative of where the numbers were. So those are representative of, if you look over there, the most red dots in 2024 were in the range of 4.5, is that 4.5 to 4.75? Okay, right through there. Okay. So that was the federal funds rate. Now what they're telling us is most likely we're going to end the year with the most votes up there is about 4.75 to 5 or 5 to 5.25. So either one of those, most likely it's saying that they're going to have 2 rate cuts based on the dot plot, not me. We're going to have 2 rate cuts because right now we're at 5.25 to 5.5. So if we're going to get to 4.75 to 5, and they usually go in increments of 0.25, we're probably going to have 2 rate cuts is what's proposed. So that's what we're seeing in 2024. Again, the red was where they were previously on the dot plot. The blue is where they are currently. And then if you go over to 2025, you can see down there, see the most of the dots are at the between 4 and 4.5. Or 4.25, on the blue side, where the red side, where Kyle's pointing right now, they expected rates to be 3.75 to 4. That's where the last meeting that they represented. This meeting, they're saying at the end of 2025 will probably be between 4 and 4.25. So we know cuts are coming. It's just when.
And just to clarify for people seeing this is not what's going to happen with mortgage rates. So the hard part is these numbers are close together. Mortgage rates are hovering around the high 6% range right now, and you're saying like things are kind of around the 5 to 6% range over here. This does not mean in 2025 to expect 3% interest rates. This is the Fed funds rate that controls, like Dan mentioned, basically the money that banks lend to each other, not directly mortgage rates. So we're not expecting rates to come down to mid 3% like it was just a couple of years ago.
Awesome.
There was a good question here from Narinder. I need to lock my rate with my lender. Do you recommend I lock in today or wait for a few more days?
The complaint I have with you is you're not locking in with us. Why? I need to know that. Why? No, I'm just kidding. I would lock in as soon as we get done with this video. I'm probably going to lock in most of my borrowers right now because I was expecting. I held off. Well, I locked some people in yesterday. Just in the what could have happened is this number, the inflation numbers could have come in worse today, and the rates would have went the other way. Way up. So I locked in several contracts yesterday, and I'm withdrawing those applications today and relocking them with another bank. So that's that part of it. But I would lock in today because we're down almost 0.5% within the last 2 to 3 weeks. So that's what I'm recommending to me and my staff is lock them in now. And if you got a lot of time to wait, maybe wait till tomorrow or the next day. But the news out today was basically what we're looking for.
House Hacker said, I heard Fed is cutting rates in July.
They never said that. So
You didn't hear that from your secret source?
no, they're going to cut, but I'm still, unless we get some really favorable numbers, I think they're going to hold off. And here's the reason why. Kyle, can you do me a huge favor? Can you just pull up like CNBC or something like that? I just want to see what stocks and crypto's doing. There's a point behind my madness.
Mm-mm-mm.
So what's happening is, well, this is kind of an anomaly. The Dow Jones, when the number was launched this morning, the Dow Jones rose 300 points immediately, right when the market opened. Okay, the S&P you're still seeing is up about 1%. You have the Nasdaq up 1%. You have the Russell 2000 up a percent and a half. Can you click cryptos? Let's see what crypto's doing. It's probably up right
There it
above the
is.
Nasdaq. Yep. We have Bitcoin. Bitcoin was up about almost $2,000 at the opening bell. So there's a lot of profit taking right now. So that's what you're seeing. But I apologize. What was the question again? Oh, this is why. So what happens is if the Federal Reserve came out today and said, okay, we're cutting rates, everything looks good, the market would be up 1,000 points. The bond market would crash. It would in a good way. So the Fed, they're even contradicting some of their own information. So let me just get one key point, because this is one I pointed out because I'm an economics geek. In the verbiage of what the Fed came out with today was they were saying, well, the core PCE we're hoping gets down to at least 2.8 or less here soon. Well, if you look at this morning's data, the core PCE was 2.6. So even Steve Leisman from CNBC asked the Fed chairman, he's like, well, your analysis says, you're hoping that the core CPI gets to, 2.6. What's there? So what are you waiting for? And he was like, well, yeah. So he scrambled around a little bit. These are just little nitpick things that I pick up to kind of help you guys navigate this market. So that's it for all that stuff.
I like it. Narendra said they sent you an email, but hasn't heard back yet.
Okay, please
Just shoot Dan another email and he'll get to it.
one. I hate to say it. I get probably 300-400 emails a day, and I try my best to get to all of them. I'll never go without answering your emails. So please send another one to me. I promise you, right after this video, I will reach back out to you.
That dude says, as always, thanks for the updates. Love that you keep us informed. Well, thanks for being here and watching. Let's see. My closing date is September 12th. What's your recommendation on locking the rates now, or should I wait till September?
Wait. You got a long way to go. I would look at July, August. Look at those key points. I don't think if rates go up, they're going to go up a little bit from here, maybe. But the projection is to continually decrease a little bit. There was a chat up there in regards to UWM 0% down. I don't know if you can find that. Can you bring that up?
Yes.
That is this is absurd. Okay, so I just did a video on this. Question: is it true UWM is offering 0 down payment on first-time buyers? Will this cause a bubble? So let me explain this. You have 2 government programs that don't require any money down, and they've been around for basically ever. You have VA and USDA. Neither of them require a down payment. Their delinquency ratings are about the same as every other loan. Okay, so what also happens is a lot of people are buying with down payment assistance and everything. That's exactly what this is. This was just a genius PR stunt. So we have programs like this. So what UWM is offering you, they're offering you a first mortgage, then a second mortgage. Okay, you're going to have 2 mortgages on your property. So it's not really they're giving you a 0% down. You're financing the entire thing. Okay, we have several programs that actually give you down payment assistance. There's no lien. There's no second lien. There's no mortgage. There's no nothing. It's forgivable. Those are the ones that we try to get you into, because these other ones, is it going to bubble the market? I mean, you think about they're giving the person in this criteria, they're giving the people 3% of the down payment, but you have to all these qualifications are coming to play right now. We have those programs available to us now. But the PR, the media, and UWM is a huge company. They're doing a great job pushing this out there, creating at least, how do I want to say it? It's like I say this with the Kardashians. Any publicity is good publicity. Just think how the Kardashians got famous. I'll leave it at that. Okay. So they're getting publicity because of this. There's many programs out there that are giving you the same thing. If you're getting a first-time homebuyer program with FHA, most likely you're getting that. I don't know. Kyle, is like the Cal Heffa loans and all that? Is that free money or is it financed like grants?
I'm not familiar with CalHFA
Okay.
exactly.
But most of these programs are kind of like exactly what they're doing. They're giving you a first and a second, and please be careful when you guys are out there looking for down payment assistance programs. A lot of them seem intriguing, but most of them they're not very good programs. So I just wanted to bring that up because it won't cause a bubble. It's really not going to do anything because there's already programs behind the scene that do exactly this, and some are even much better.
Yeah, and I think the difference is kind of a down payment assistance versus a grant. So down payment assistance, when most people talk about down payment assistance, it often is either there's interest on that, there's like a second mortgage, so there's like interest on that, it has to be paid back monthly, or when you sell the home, you have to pay it back. And so what can be difficult about those situations is sometimes what can happen is you can buy a home with down payment assistance, because I've run into this before with people, especially when it's a refinance. I know, Dan, you and I have talked about that before. Someone wants to go refinance their home and then they forgot, oh, we used a down payment assistance program for our refinance. And so sometimes what can happen on those refis is either they require the DPA to be paid back partially or fully when you do the refinance. And so you might not have enough equity to be able to refinance into a lower rate. In some instances too, there's also restrictions on if you can refinance within a certain time period. Some, local to Ohio will restrict you to 5 years where you can't refinance without having to pay back the whole thing. So there can be a lot of frustration with that. Versus a grant. A grant is something where someone gives you the money and they never ask any questions about it again. And so a grant is truly the like free money thing that comes from Community Reinvestment Act funds. And so that's basically just money available that's provided by federal and local governments for lenders to give out more loans. And so grants are where there's no monthly payment, there's no interest, you sell, refinance at any time. You never have to pay back that money. Once you close on it initially, you can immediately sell the home and there's no issue with that grant. Versus down payment assistance does often require some sort of payment or a payback. There's usually some sort of red tape on the down payment assistance. And so that's why we mainly stay away from the DPA programs. But we do have 3 grants that go up to $7,500. And so you can go to winthehouseyoulove.com/grant. Fill out a couple questions and we can show you what grants you could qualify for here if you are interested in that.
That's also, if you guys are watching from my channel, just go to the rate update. And then at the top, one of the icons on the top will say grant. You can hit that and you'll go right to Kyle's website.
Let's go through a couple questions here. On my way to work, Frio prices. I'm guessing gas prices, $2.99 a gallon. And on my way home, they were $3.29 a gallon. Oh, interesting.
That's and here's the reason why they bring up that. Every morning I bitch about gas prices. Like one day here was weird. And I don't know if you guys know this, but the Biden administration a couple weeks ago released 1 million barrels of oil to hopefully help gas prices. Okay. Well, they did for about 4 hours because 1 million barrels of oil doesn't really do much anything. So that was a day I was driving to work and gas was like $4.44. On my way home, it was like $3.60. And I'm like, holy sheesh. And then on my way back to work the next morning, it was $4.14. So I'm like, ooh, that was short-lived. So I bitch about gas prices every day.
Oh, okay. That makes
all
sense.
over the map.
Thoughts on purchase of a new home? Can you clarify? Do you have more things in general?
Good price, good area. Can you afford it? So, and I love your name. We just need to change.
Or just general thoughts. New homes are cool. That's
my a little more context because it's like, should I buy a car? So we'd love to help you, but and how we look at this too is that's your decision. Our decision is just help you get there. Okay, it's like, for example, you want to become, you want to run the marathon. Well, just because you want to run it doesn't mean you're going to do it. We need you to work at it. So we're here to help guide you along this way, but we need you to be in the position to be able to do it.
Is this the next big short? I don't really know
Yeah.
what we mean by that there
No, the
necessarily.
Next Big Short was basically that movie. It was the subprime crash and everything. The difference between that, and if you watch the Great Short, you understand why the financial markets melted in 2008. And I'll say the financial markets. It wasn't just mortgages. You had huge financial institutions on Wall Street go under because of it as well. So it wasn't just a mortgage issue. It was just a worldwide financial catastrophe, I guess is I'll put it that way.
This person said, so when rates drop, sales activity increases. You think if rates drop over the next year, 5 to 6%, it would lead to an increase in home prices?
Here, you want me to take that?
Yeah.
Here's my thought on it. Even if that happens, I this is my thought. As I'm driving around my neighborhood, driving on my way to work, on my way to different places, I'll even ask you, Kyle, do you see more and more homes coming up for sale around your area? Pay much attention to it?
Maybe a slight increase.
My neighborhood, I kid you not, when a house went up for sale, I mean, when we're driving around, I'd look at my wife and be like, wonder what happened to those guys. Now the housing market's getting a little bit back to normal because there's a couple homes on every block. I'm in Chicago, so it's transit. Normally you see 1-2 houses on every block, subdivisions and things like that. Now it's starting to pick up. But for the last year, I mean, you drive around my neighborhood and I think there was like 2 houses for sale, and many of them, a buddy of mine sold his and it went for cash and it didn't even hit the market. He lives a block away from me. So it's like, but now we're starting to see more and more and more homes come up. So what does that mean? So I think rates are going to come down. They're going to come down. It's going to spur up activity, bidding wars. But more and more homes are going to come for sale that make it that you don't have to bid as much. So will home prices increase? Probably, it depends on the area you're in and how much activity and how many homes are available. The one area that we always see, and I've been saying this for 2-3 years, if you have a house priced $250 or less, it'll sell. Trust me, it'll sell if you're in a decent market, and that's the prices kind of in that realm. If you're getting 7, 8, 900,000, those are the sticky ones because the rates, like on my house, if I had a standard rate, my house payment would be double that I'm paying now. So I wouldn't really care for that. So that's what you're seeing on the 250 or less, selling like hotcakes, and it's going to continue. So with the increase in inventory, I don't think you're going to see a huge run up in prices because you're going to have more and more homes come to market. So again, it's a supply demand thing.
My closing's planned for the end of July. Is it better to lock the rate now or wait for some more time, say until the next CPI report in June? Well, now is June.
Yeah. I would probably wait if you have all the way to the end of July, because here's how rate locks work, just so you guys understand this as well. Rate lock works in increments of 15 days. You can lock in your rate for 15 days, but it has to be completely approved, cleared, closed, and everything else. So you can get a 15-day rate lock. Then you get a 30-day rate lock, a 45-day rate lock, a 60-day rate lock, a 90-day rate lock. What I want you to understand, though, is the longer the duration of time you have to go out for your lock, the worse the rate's going to be. So you want to try to time it to a 30-day or less lock. So if you're getting 30 days from, you said you're closing the latter part of July, I would wait just a little bit longer to see if you can, the rates don't pop back a little bit. I would wait till you're 30 days from your closing and then look to lock.
Sweet. Let's see. How easy is it to refinance an FHA loan? I'm checking to see if I need to have 5% down payment with the conventional or 3.5 with the FHA, but I'm afraid there could be cons with FHA. FHA for a lot of people is pretty easy to refinance. Government loans, so FHA, VA, USDA have kind of this like built-in easy refinance that they call a streamline refinance. With like VA, it's called an IRRRL, but it's a slightly different. But basically, on a conventional loan, when you refinance it, you basically have to do the conventional loan all over again. So that means a new appraisal. You have to go through underwriting again. all of that work that you did for the purchase has to happen with a refinance. Now, with a government loan refinance, a streamlined refi, often they don't need to do a credit check. They don't need to check debt to income ratios, and they don't need an appraisal as long as you've been in the home for 6 months. And so what's really nice about these streamlined refis is, again, you're not running into any issue about your home value, because like with a conventional loan, there has to be a new appraisal. You're not running into any issues with, hey, I changed jobs. So that can often trip people up on a refinance on a conventional loan. Is maybe you got into your home and all of a sudden you started another business or another job, or your income changed in some way. And now all of a sudden you might not on paper be able to qualify, versus on a streamlined refinance that doesn't have to get checked. Basically what happens on a streamlined refinance is there's a credit check only to make sure you've been paying your mortgage payment on time. So you need to make sure your mortgage payment's on time, obviously. But if your credit changed in that time period, so if it decreased by 20 points, it doesn't impact your eligibility for that FHA refinance. So that's why FHA, I know a lot of people, not a lot of people, many realtors will kind of sway people away from FHA loans because they're somehow bad in some way. But when you're doing comparisons, and I have a loan comparison calculator in the description, when you're comparing FHA versus conventional, in a lot of cases, FHA can be a cheaper loan than conventional, even considering that the mortgage insurance doesn't fall off and there's upfront mortgage insurance. It's because the mortgage insurance rate now is so low compared to conventional loans, and you get a lower rate on FHA. And so in a lot of situations, unless you're getting a home ready or a home possible conventional loan that has a reduced rate and reduced MI, FHA is actually a better long-term option, in addition to the option to have a streamlined refi. So I would definitely explore both those options and see what works. But unfortunately, conventional is going to be a stronger offer to a seller just because of the perception around FHA loans. Hypothetically, how low can mortgage rates be without Fed rate cuts?
That's a hard one to answer.
I know.
Because it's all kind of predicated together to a point. So the reason why the Fed cuts and bond, it's all the bond market, I guess is the way to put it. It's how the bond market works. So when the Federal Reserve cuts rates, that's saying, okay, the competition, I don't even know how to explain this. You know, a good way to explain this? They could, I don't know how to answer that question. There
really isn't a good answer to that question.
Yeah. I guess that.
The closest thing would probably be maybe like the 10-year, like the spread between
if you watch
what we normally see with the rates in the 10-year.
Yeah. If you take the 10-year Treasury and add 150 basis points to that rate, which is 1.5%, that would be a standard mortgage rate if we were in a normal environment. Okay. So I don't know what the 10-year Treasury is right now, but again, you add 1.5 to that equals such. So that'll give you basically the difference from where it should be versus where it's at today. That's kind of the risk tolerance that the markets have in the rates right now.
Is Richard Fain a legit source? Do you know who that is? I have no clue who Richard Fain is.
I think he used to be a football player, if I recall right. I think he used to be a football player. He's in Florida. He walks around and just tells you how to invest.
Why does everyone walk around?
I don't know. That's must be the hip thing to do, and just tell you, how bad their where they live is. Then the prices are terrible, insurance is terrible, and then move.
Okay, here's my theory. Dan, you might not understand what I'm talking about here. Let's see how hip you are. You ready for my Gen Z pop quiz? Okay. Yeah. Are you familiar when people make a video, they act like they just recorded and they set the camera down and then they're like eating in the middle of talking?
Yeah.
Okay. So that's like the Gen Z way to seem like your video was like casual. It's like, oh, you could just caught me in the middle of eating lunch or something, right? Yeah. I'm wondering if the walking around thing is like, it's like Gen X trying to act casual. Because I think it's trying to be this caught me off guard on my walk here.
Is Richard Fain? Is that the person that I'm thinking of? Richard.
I see a YouTube channel, and I also see American former football player, but I don't know if these are the same people.
Yeah, yeah, that's him. Actually, I reached out to him about 100 times and he'd never reply. So he's, let me see. Yeah. Um, I, I don't know. I don't really follow him. I know he's a former football player. Um, I don't know how good his data is. So I can't really speak on his behalf, but I did. I watched a few of his videos. He was talking about real estate and all this other stuff. Half the people that tell you things, you hate to say it, they're just completely guessing or they're cherry picking their data. What we try to do here on the channel is just give it to you as is. I don't care what I don't care if rates are going up and down. I'm just telling you what they're doing. I don't care if house prices go up and down. I'm just telling you what they're doing. I have no pre-formatted piece of this where I have to, be on the side that the housing market's going to crash, and that's what all my revenue and all my streams are based on. And I don't want it to be that, housing prices are always going to go up, because that's not the truth. So our goal here is just to provide you the data as it comes in and help you navigate the environment.
Paper Roses said, did the interest rate change? If so, what is it? So the Federal Reserve did not change the federal funds rate, which is different from mortgage rates. Also, mortgage rates are not set. They're different between every lender and also dependent on your independent circumstance. So if how much money you're putting down, what your credit score is, are you buying a condo or a single family? What state are you buying in? Rates change with tons of different factors, but the average rate in the US right now is a 6.98%.
But while you're on there, the 10-year Treasury is at 4.3. Okay. So if you can bring back the rate sheets, if you would. So somebody says, where should rates really be? Well, the 10-year Treasury right now is 4.33. If we add 1.5 to that, you'd be at 5.8. So that's technically where rates historically would be, mortgage rates right now, if we didn't have all the uncertainties in the federal government, in the world, in everything else. So that just gives you kind of a precursor. That's where mortgage rates should be historically, and why.
Whose rule is it the FHA has to have PMI for life? It's always my little stickler thing that everyone says PMI for FHA. FHA is actually MIP, but it's the same thing, I guess.
Good thing you're answering this question, because Kyle's the one that created that rule.
Yeah, that's right. Yeah, I did make that rule for FHA. No, so it's set by FHA, so no lender is going to be different. It's all the same. FHA has mortgage insurance premium, MIP, for life. Any chance that changes? No chance. It got changed in, I can never remember if it was 2013 or 2015. Do you remember when it changed? I want to say 2015 is when, before loans originated before 2013 or 15, it fell off at 80%, and then it got changed. So I doubt that's ever going to change here in the near future. What's your opinion on commercial real estate? I'm seeing numbers of inventories are going up. I don't know that I'd want to be in commercial real estate at the moment.
I honestly don't follow it at all, period. I know nothing about commercial real estate.
Yeah, I'm very out of it. I have a friend who is in
another market that's completely, dependent on the area. If you're in a good area, then the employers or the companies that require people to come back to work, well, they'll fill back up. If you work for a company that just work remote, then they're not going to fill back up. So I don't know.
I have a friend who works in like commercial real estate development, but he doesn't do like commercial property investing. They will build like whole developments. So I think his experience is probably a little bit out of there. That dude said, I'm a realtor in California. I love that Kyle and Dan do these live streams. I have it on in my office for all the realtors to see. We got to say hi to all the other realtors who are being forced to watch this.
That dude, if you didn't watch my channel, I'm putting together right now a weekly live event like this just for realtors. I'd love to have your team. Shoot me an email if you would. Could you pop up my email on there? If you wouldn't mind emailing me, I'd love to set a schedule with you guys, because what I'm looking for right now is I want to start holding them on Tuesdays or Thursdays, but I'm looking for a time. So if you guys could, if you guys are interested in joining me at that time, let me know. I can actually cycle it around you guys out there because I'd like to incorporate California. We still get a ton of business from California.
Dan, what I think you should do, and maybe we can talk about this later, I think you should do a weekly Zoom and then maybe stream that to YouTube. Because I think in the beginning, if you get some more like interactivity or like people can ask their questions directly, it might be a little bit easier than just the live stream.
Got it. Okay.
Lost my spot where I was. Oh, it's hard to get into a house because the states are raising property taxes. Yeah, and as home values increase, so do the property taxes as well, unfortunately.
Well, just so you guys know, the property taxes are usually a specific percentage. So as the house price goes up, they'll go accordingly. And when they come down, the counties will change that factor percentage to make it that they're still making money. So I've tried that. Trust me.
They all said hi.
That's
Hello.
awesome.
Let's see. The investors come from Chicago and buy up everything. Some are slumlords, and my relative that works for the county says they're doing this. Interesting. Okay. How easy is it to refinance a conventional loan? It's definitely easier than a purchase. The nice thing about a refinance is that often you're not dealing with the stress of is the inspection going to go well? Is the seller going to fight me on things? When you're working on a purchase, there's a lot more anxiety involved. Where a refinance, there should be no anxiety involved. The only thing with a conventional refinance, like I mentioned before, is your job and your income still has to be consistent in the same way that it was when you purchased. Your home value, you need to have enough equity to be able to refinance. You also want the rate to change enough where it makes sense long term to do that refinance, and it wasn't just you don't need a refinance on a quarter change in rate. So outside of that, also your credit needs to be good to be able to refinance into a conventional loan as well. Is it a good idea to go with FHA now, then refi later to conventional when the interest rate decreases? You definitely can. It's a great strategy if you want to take advantage of FHA now. And then always look into compare your options of an FHA Streamline versus a conventional loan, conventional refinance. And you may find that the Streamline may be even a better option long-term too. With a high interest rate in the market, I'm thinking to do 20% down by loaning from my 401k so that I can manage my monthly payment and stay away from PMI. Is that a good option? Experts, please suggest. I've got something for you here. You ready for this, Dan?
Oh, you got a calculator.
Hold on.
It's got a calculator for everything.
It's a problem.
It is.
I don't have a link to this available online. Do me a favor and just shoot me an email and let me know you want this. And I won't go through this whole thing here because we have some other questions. Basically what this does is, that's a little small, isn't it? You're not alone in this question. It's basically like, do I wait to save 20% down? Or in your instance, do I pull from my 401k to do 20% down? Or should I buy now and pay PMI? And what this will do is you get to put in all of your numbers here. So your purchase price, your down payment, the whole thing. It's going to walk you through this entire scenario to basically say, hey, if you bought now, 3% down is $11,000 versus saving $75,000 for 20% down. So you're missing $63,000. Again, this is just put in your own numbers here. In this scenario, okay, well, you need to save just over $63,000. So how long would it take you to save that? In your case, it wouldn't take you any time because you'd pull it from your 401k, but then you're also considering, okay, well, you're losing out on the interest that you could gain in your 401k from that. So it's something that this calculator doesn't consider because it's not fully in that there, but this can still help you. So for a lot of people, it takes them time to save that amount of money. So even if it took you 2 years, that's just under $2,700 a month. Can you save $2,700 a month for 2 years to be able to make 20% down, while also considering that historic appreciation over 30 years is around 2 to 4%, depending on the market that you're in? So based on all of that math, I won't walk through this whole thing because, well, just for the sake of brevity, goes on to show you, it compares based on the appreciation you could gain in that time. Basically, what ends up happening is a lot of homes appreciation outpace your ability to save for a down payment. And so treating mortgage insurance a lot more like an investor on a margin account would treat that margin, where you're basically paying a premium, a small bit of almost like a interest in a way through the mortgage insurance to be able to take advantage of securing the home now rather than waiting so you can gain that appreciation. So you're welcome to shoot me an email and let me know you want it, and I can send that over to you.
You had a calculator.
Of course I do. I always end up missing where I am at in the questions. All right, Dan, we got to go through our little
okay, 1 minute
speed round here.
This is our rapid rounds.
So
those are
Paper Rosa said the realtors avoid
we got
calling me
1
back.
minute to answer these. Remember.
Yes.
What the?
I need some
There you
dramatic
go.
music. The realtors avoid calling me back, especially when they hear how much my approval is. And because it's a military credit union, they assume that no property will pass inspection, but it's a conventional. You taking that or me? So basically what would be beneficial in this situation, talk to your loan officer and say, hey, call the listing agent for me. Your loan officer should be calling the listing agent. Dana and I were just talking about that earlier. If they don't do it, just schedule a consultation with us. This is something that we can do to make sure that the listing agent's comfortable with the loan, that they know that you're approved. There's not going to be any issues with the loan. Dan will go and call the listing agent and say, hey, we've got everything verified and this loan is good to go. So that's what I would suggest.
I got a question on this one. Can you go back?
Yeah.
It says when they hear how much my approval is. So if you don't if you wouldn't mind telling us how much it is, because that might be the determining factor. I got an email from somebody the other day and they're looking, and I forgot to email them back. The realtor just called and yelled at me. They're looking to buy a $70,000 home. We can't do a $70,000 home. So because of a lot of regulations and things like that. So if you wouldn't mind sharing what that price is, that might be the determining factor why you're not getting, anybody to call you or accept anything.
Oh, the streaming software it now shows me how many comments there are. So there's 101 comments. Just for the sake of when people are like, you skipped my question, is okay. 100 comments is a lot to get through in just an hour. If we answered everyone, how quick would we have to answer all these questions?
A lot.
That'd be less than a minute.
For that, I bet.
Shut up. I should. That'd be less than a minute per question. It would be impossible. How low would rates have to go in order for it to be worth it for me to refi a 2875? Oh, I think
zero.
Yeah,
Zero.
I think you're going to be long out.
Zero. Let me know. I'd love to help you.
Yeah, I think you're going to be long out from looking at a refi. Take your 2.875 and enjoy it. Bask in the sun. Tell everybody about it. Make them hate you. That is what Dan does. We get it. We get it. You got a cool rate. Print out T-shirts with your. Is that what you have, a 2875?
2.625.
Oh, okay. Cool.
And people are like, I mentioned in a video recently, I'm like, I refinanced like 3 times in like a 1 or 2 year time frame, and people are like, well, isn't that cost? I'm like, guys, I work at the bank, so I don't have some of the fees that you guys have. I do have some of them, but there's some fees that I don't because I'm an employee.
Even if you didn't. Oh yeah, they said 55,000 for the purchase price.
That's why. So the 55,000 is going to be a very much deterring factor, because it's just when it comes to regulations, it's in regards to fees. Okay, your fees can exceed like 3%. Go ahead. I'm sorry.
I will say they're already approved with Navy Federal. So the issue they may be running into is just the price range for where they're looking at. Because 55,000, like even around where I'm at, it's like 55,000 used to be able to buy a like livable home here. It was by no means like super nice, but it was livable. And now
Yeah.
that's not even close to an option.
Got it.
I have a 20% down payment for my home. The rates are holding me back now. Yeah, I know a lot of people are in that situation. Gen X is overweight and trying to pretend to be healthy over the walking. Maybe that's what it is. They need to walk around a little bit more to get that.
I find it funny.
health.
I mean, more and more, you see some of these guys are killing it, and God bless them. You know, they do what they do, and some of them are informative. Like the guy that they mentioned earlier, he does talk financials. He talks about different investment strategies and things like that. Others just walk around, showing you buildings and how bad it is. And when I'm done with it, I'm like, did I learn anything, or so was it educational or just kind of entertaining? So my goal, I try to educate you guys. And as you can see, I don't walk around. I'm not, I don't have fancy stuff all over. I just want to get the data out to you guys so you understand what's going on. But maybe I should start walking around and give me a vote. You guys want me to start walk around neighborhoods? Thumbs up. If I'm doing a good job as the way it is, just thumbs down, because you just like it the way it is.
I think you should change it up a little bit. I think you need to maybe you do rollerblade tours of little neighborhoods, and we hold out a little GoPro in front of you, and we get to see you skating around doing some cool little things. Would buying down the rate be something to look into? You definitely can. I know you mentioned about the rates. Yeah, I know where you're headed.
Here's what. Go down. The temporary 2-1. Go ahead, take it.
Oh, okay. You take it.
So, Mara Cruz. Here's what I've been trying to tell everybody to do it this way. Do a temporary buy down. Do it like a 2-1 buy down or something like that if you're getting seller credits. Because what will happen is, we just went over this afternoon, the Federal Reserve came in and said by the end of next year, 2025, there's going to be 5 or 6 rate cuts. Okay, so we know the rate cuts are coming. It's not me guessing, it's the dot plot. Okay, so why would you permanently buy down, spend $4,000, $5,000, $6,000 to buy down your rate on a rate that you might be able to get next year for free? So what I've been suggesting to everybody, even if you're not going through us, ask for a 2-1 buy down. As long as you're getting seller credits. If you're getting seller credits, use it to those. It'll buy down the rate or the payment temporarily. And then when you refinance in the next year or so, you're going to get a portion of that money back, versus spending it all, buying down the rate, and then the money's gone. So if you don't know how a 2-1 buy down works, check out both my Kyle and my YouTube channels, and just check it. We have videos there kind of explaining that to you, and we also have Excel spreadsheets and everything else to help you with that.
Dan, you're not allowed to talk on this one.
Okay. All
right, Dan's banned from this question, but I'll give you my answer here. I think YouTube real estate, you like how I haven't used this. I haven't actually been pressing the timer button.
Yeah, when you answer the question.
If there was a way to give you access to it, I would do it. But, I think with YouTube real estate content in general, there's kind of been a little bit of a separation between education and entertainment. And I don't think that means one is necessarily bad or good, but I think it's important to be mindful of what is actually more entertainment around real estate rather than education. And entertainment tends to be more when you have a feeling coming from a video, there's either fear or excitement, or there's motivation, there's something happening inside of you that tends to lean more towards the entertainment side. And so with that, you have a lot of people who are kind of assuming, or they're extrapolating what they think is going to happen based on data. And now we can look at historical data to look at what's going to happen in the future. But what we've seen directly as a result of a lot of more what I would view as entertainment channels around YouTube and real estate we've done quite a few live streams where we have people in here who are like, I listened to a lot of people online saying that the housing market was going to crash. And so I waited out the market for it. And then they're like, I can't purchase now. Rates are higher, prices are higher, competition is higher. And they're like, I wish I would have just bought then when everyone said it was going to crash. And so that's directly what we're seeing, is a lot of people got priced out of the market because they believed the hype of this thing, and not realizing that for a lot of these people on YouTube, there is financial gain and financial incentive to just push one narrative that makes you feel very strong emotionally. So Dan is not
I'd
allowed to
lo-
say anything. Nope.
Here, I would love to do a video though, going back to like 2021, when house pick a house, pick the rate, pick the payment, okay, and then compare that now 2 years later, say, to that same house, because a lot of people say, well, you got to check it out. Is it cheaper to rent versus buy? Well, I was thinking about that this morning. A lot of people, when you're renting, you might have a 1 or 2 bedroom apartment. Then when you buy that house, you want a 3 or 4 bedroom house, 2.5 baths, this, and that. So it's much, much bigger than your apartment. Okay. So, but if you really go back into like 2021, look at home prices, and no matter where you live, I don't care where you live, look at that, check out where rates were at that time, figure out what your payment would have been. Okay. Now, fast forward 2 years, what's that house worth now? What are you paying in rent now for an equivalent house? I can almost assure you, you're probably going to be ticked off that if you could have bought it at that time, that you didn't. So that's all I got to say on that part of it. And Javier did a fantastic video, kind of fact checking that website that you guys were just talking about, and it basically that Reventure Capital app, it failed. I mean, it gives a lot of misinformation. I'll put it that way.
Does FHA PMI drop after 11 years with 10% down? Yes, if you put 10% down or more, the MIP does drop after 11 years. That's not something I usually add in when I answer these questions, just because most people with FHA aren't doing 10% down. Most people aren't doing 10% down in general. But yes, it does with FHA. Steven said, getting keys tomorrow. Me and my fiance literally won the house we love. Thanks for sharing your expertise and helping us navigate through the process. Much love. Awesome. Congratulations.
Thanks for using us.
Yeah, that's super exciting. And we got the flag and crystal ball emoji in there too.
Thanks for coming on, even though you're at the tail end of all this.
Okay, let's see what else we have.
You didn't tell them how to do a consultation.
Oh, that's definitely something we haven't done yet. Yeah, so if you are on here, we are federally licensed loan officers, meaning that we work in all 50 states. So what we do is we have just a simple 4-step process. So if you're like, hey, I have a question, I want to go further into detail, or maybe you just didn't want to ask on the stream because you didn't want your little profile picture to pop up here. Totally get it. What you can do is go to winthehouseyoulove.com and schedule a free call with us. So there's no obligation, there's no cost to it. After that, or basically on the call, you can ask any questions that you have. We'll ask about your scenario to help guide you into the right loan for you. Then we'll have you fill out a 15-minute application. So we're just asking questions about where do you work and how much money do you make and what are you going to use to pay for the down payment. From there, we'll show you what loans you qualify for and your quotes with them. So what your monthly payment is, also an estimate of the maximum purchase price that you could qualify for. So when you go to shop for homes for step 4, you know that you're able to get approved for a loan and you know how much it's going to cost when you look at buying a home. So many people do everything backwards and then they end up feeling stressed out and overwhelmed and anxious because they sit on Zillow, they're not approved, they find a house and they're like, oh, I have to get approved right now to be able to make an offer on this house. Because most real estate agents are not going to show you a house unless you have a pre-approval or pre-qualification. So take the time now. I know it's not fun. It's not the most exciting thing to do on your Wednesday afternoon. But if you schedule a call and get everything done ahead of time and do it this way, you're not going to feel burnout and stressed and overwhelmed through the process. And we think that the more prepared you are, the more calm you are, the better decisions you're going to make, and not get kind of swept up into the emotion that a lot of home buyers can get into. So winthehouseyoulove.com. And we'd love to be able to help you out. I think I like Kyle's idea. What was my idea here? Oh, this must have been the roller skating thing. I was trying to think, what was that about?
I don't know.
So we'll be doing this live next Wednesday, same time, same place, 3:30 Eastern. It'll be either on my channel or on Dan's channel, The Rate Update with Dan Frio. Also next week, for a surprise, Dan's going to be tuning in from his rollerblades.
So I'll be walking around. I can do that, buddy. I can do that. I got rollerblades.
You're not going to be walking
about
around.
we
You're going to
do
be
it-
skating around.
Can I be in my backyard swimming? I'm in for that one.
Okay. All right. I'll accept that. That's a fun one. Dan's going to be doing laps in his swimming pool while talking about the housing market. So thank you all for being here. We'll see you all next week.
Thanks for coming by.